Let's take a look at all things money matters now. The JSE is slightly sluggish while its global peers were mixed as the focus turned to a speech to be delivered by U.S. Federal Reserve Chair Jerome Powell later today. And on home ground, the wait continues for an expected cabinet reshuffle after new MPs were sworn in Parliament on Monday. Gary Booysen is the portfolio manager at Brand Swiss. He joins us now to take a look at the latest market moves. Gary, good to see you. So let's start with an overview of how the markets and local currency are faring so far today after the rand fell to its worst level in 6 weeks.
So we are still on the back foot. We've got the financial index down around 0.5% at the moment. Industrial index is down around a third, while the resource index is actually bucking the trend, so it's up 0.5% at the moment. But certainly the pessimism that we saw coming into the week has continued, and we're still seeing a very, very weak rand dollar currency. We're sitting at around 17.61 to the US dollar. A lot of that is actually coming from dollar strength, however. So if you remember back the non-farm payrolls on Friday, they were very, very strong. We were expecting the unemployment rate in the US to weaken to 3.6%, and it actually strengthened to 3.4%. And that has just fueled this expectation that the US Federal Reserve's work is not yet done, that we might have further interest rate increases to deal with. And obviously higher interest rates on US dollar balances mean that dollars become relatively more attractive. And that's really put everything on the back foot, that is priced in dollars. So we've got the Brent crude oil price down at $82 a barrel. We've got the gold price having fallen this week as well, down to, it's currently sitting at 1,871 per ounce. And it really is a story of dollar strength that is just rippling through financial markets. And one of the reasons that speech that you mentioned by Jerome Powell is going to be so important in just assessing how the Federal Reserve's monetary policy outlook might have changed following the very strong jobs report.
Let's go to Turkey as they continue to count the cost of following that earthquake. The lira dipped to a record low and its main stock market fell 1.35%. The currency was already under pressure. What more damage did the earthquake do, if at all?
Well, of course, the earthquake is going to have real-world economic impact on Turkey's economy, and you're feeling that in the stock market, and certainly the lira will feel it as well. These real-world events do have very profound impacts on the financial markets. Unfortunately, the issues around Turkey, and its monetary policy are well documented, and while the lira might be at the weakest levels, the massive slide that we've seen in the lira over the last couple of years can't be blamed on earthquakes or underlying economic conditions, but rather fall squarely at the rather unorthodox monetary policy that their central bank has followed. In a rising interest rate environment, they've chosen to cut interest rates, which goes against all conventional wisdom, and what that has resulted in is a much weaker lira. Now part of it, sure, the US dollar is a little bit stronger. That's potentially exacerbating the lira dollar rate, but overall, this is a weakness in the currency based on their central bank actions.
Let's take a look at foreign exchange reserves in South Africa. It's increased to a new record high in January of this year. Why?
So there's a couple of factors here. Again, I don't want to point to every reason at the US dollar, but the Reserve Bank did say in their brief that obviously the slightly weaker dollar that we've seen over the last couple of months has helped to just revalue some of the dollar-priced assets. It's helped with the valuation adjustments of, for example, our gold balances, making it look a little bit better. But there's also a foreign loan that was received over the last month from KfW Development Bank of around 300 million euros. That's also boosting up that number, and that's really why that we're seeing this very, very strong foreign exchange reserve figure coming out. It's been growing over the last 3 months, which will be the dollar impact, but that development bank loan also just boosting the figure.
Sasol has published a trading statement for the 6 months ended 31 December 2022. How did they perform?
Not well. Not well. So the market is not liking this trading statement one bit. I think with the higher energy prices that we've seen, I think many were hoping for windfall earnings at Sasol, and they've reported that their earnings per share is going to be down between 0 and 10%. The market is punishing the stock on the back of that, so sending the stock down over 6% at the moment. Their reasons, yes, they did benefit from higher oil prices and the slightly weaker currency, but unfortunately high energy costs, lower chemical prices as well, and issues also with supply chain management and just the issues that they've had around Transnet. Have been an issue. They've also seen some problems in their SA coal mining production, just given lower quality, and that's also impacting the numbers. So a little bit of a disappointment. They've also got a number of fair value adjustments to the Lake Charles project, for example, actually writing back some provisions there. So a very mixed trading statement from them, but market not liking it and hoping for a little bit more, and that's why they're punishing the stock.
Sure. South Africa's largest cement maker, PPC, is reportedly considering selling its Zimbabwe business for about $200 million. What's going on there?
It was very early days, and this is information from an insider that does not want to be named. PPC management has said they receive unsolicited offers for their assets all the time, and it seems like these negotiations are very, very early, and it definitely surprised the market. So the stock is up almost 20% on the back of this news. This does follow a trend that we've seen in Zimbabwe, where other cement producers have also been selling their businesses to local providers. The Zimbabwe business is something that would allow PPC to focus on their South African assets, but remember, while the Zimbabwe economy is obviously, has its own challenges, 80% of the business of PPC Zimbabwe is actually conducted in US dollars. So it does look like an interesting business, and hopefully they can, with this announcement, almost being leaked, the management team will still have a good opportunity to negotiate for a better rate. But yeah, the business, mainly focuses that has made the inquiry at least, and has proposed the purchasing these assets, is in the road construction and housing industry, and this is a growth sector in Zimbabwe at the moment, with a PPC report coming out and saying that compared to 2017 numbers, essentially cement demand is up around 60%. So hopefully PPC gets a decent price for this. It might not go through at $200 million. Still very early days.
Thank you very much for that. Do stay with us.